San Diego, California, this is the Frug Life Podcast, the show that teaches you how to save, invest, and earn money. Here's the host, Mr. Frugal himself, Ricky Hershey.
Welcome to the Frug Life Podcast. I've used the app Robinhood for a while, and while I've enjoyed it for quite a while, I've kind of pivoted away from it for the time being. Now, I still have the app, and I still do have a few stocks on there, but it's not my primary trading app. And this is for a few reasons. One is this Graham Stephan video I watched a long time ago. I think what had happened in the video is that he or his girlfriend or now fiance had a bad time dealing with customer support on the app. Like, there's no way to get in touch with support, I think is what they were saying, which is not good. Like, when you're dealing with money, if something goes wrong and you need help. I don't have firsthand experience of that because I don't think I've used their support. Actually, I did contact their support once for a reason that I will talk about in just a little bit. Now, Robinhood, the app, did crash on me once a few years ago. A day the markets were really moving around and there was a lot of volatility that day. And I guess all that activity caused the app to crash. And so you couldn't trade on Robinhood on that day, which wasn't great, right? And that actually impacted me, right? Because I wasn't able to log in, I wasn't able to trade and do what I wanted to. But that's another story. Now, I could be wrong, but I feel like this kind of thing doesn't happen as much on like a traditional online brokerage, right? Like, I've never heard of Charles Schwab being offline, right? This is mostly just speculation on my part or a guess. But with these newer apps, these newer companies, I think reliability might be more of an issue. The biggest reason, though, I moved most of my funds off of Robinhood, though, is so that I could donate some of my stock to a charity, which Robinhood would not facilitate for me. I think I contacted their customer support and they said they wouldn't do it. Or maybe they just had an FAQ where they said they don't do that. Now, I think most of the new apps, new brokerage apps don't have this feature either, which is pretty annoying if you want to do that. So for that reason, I transferred a bunch of stocks to Charles Schwab. And I use Charles Schwab for that now. My one other complaint with Robinhood is I've actually referred some people to join the site, and Robinhood didn't pay me for it. And I think it's actually happened more than once. I'll even include my link to join Robinhood in the show notes, and I can guarantee I won't get any signups for it. The app I do recommend using is called Sofi, which I've spoken about a bunch on the podcast and blog. It mostly does the same types of things as Robinhood. Maybe their customer support is a little bit more reliable. Sofi does have a, quote, top mover section like Robinhood does, and I'm going to talk about that in the next segment of the show. What Sofi has done really well for me, though, is that they've paid me a ton of money. I've gotten hundreds of dollars from Sofi, from all sorts of promotions, all sorts of special offers. They even paid for a course for me on Coursera, and so I even have a certificate in personal finance from Coursera because of Sofi. So I really like them, a cool fintech company. I'm like some plus or super member of them or something like that. So I just have positive things to say about Sofi. It's been a great experience for me. There'll be a link in the show notes to sign up for Sofi if you want. You'll get some amount of money as long as you fund your account with some amount of money. The deals always change, so I'm kind of being generic. All right, we will be right back with the next segment of the show. Welcome back. In this segment of the show, we're going to talk about top movers. So top movers isn't a problem exclusive to Robinhood, but Robinhood does have this feature. And so there's a study that is asserting that the way that this is designed, the way that the top movers is featured, basically you're more likely to invest in things that catch your attention, and the top mover section is pretty prevalent, and so you're more likely to invest in top movers because of the way they're portrayed in the app. And so this study is talking about herding events, where especially when smaller market cap companies are featured on Robinhood, lots of people buying into them causes the price to go up even more. And there's like this bit of a herd mentality effect going on. One example that was going on at the time I wrote this piece was Palantir. If you aren't familiar, Palantir was this big data analytics company founded by Peter Thiel. You know Peter Thiel from PayPal. If you watch the show Silicon Valley, the character Peter Gregory is a clear nod to him. And I was talking about Palantir as if it was past tense, but it's still an active company, right? Snowflake is another big data company that had a huge uptick in price near its IPO. And actually, I audited a company too called Medallia that had an IPO, and they had this big pop on IPO day as well. Anyways, all of this movement, all this momentum, all this excitement causes a bias, I think, in the market. And it's a bias I like to take advantage of sometimes. Oftentimes, I believe the markets overreact to positive or negative news. There may be extraordinary returns for a day or two, and then a correction to the overreaction. That's a little bit more gradual. Now, it's a little bit trickier to respond to an overreaction to good news. You'd have to short the stock, which is an episode for another day. In short, though, that means that you are selling a stock you don't actually own and buying it later. But it's not free to do that, and there's quite a bit of risk involved with doing that, at least in my opinion. On the other hand, though, when bad news comes, the market likewise can sometimes overreact to the bad news. On the first day or two after the bad news is released, the stock might plummet, and then sometimes after that initial plummet, the stock will recover a little bit. Now, this isn't risk-free, right? Sometimes more bad news comes and the stock just continues to lose value. But oftentimes, you can kind of see this effect, right? That the market reacts very viscerally to that bad news. And then after the markets settle a little bit, the price will potentially stabilize. Now, of course, none of this is financial advice. I'm not suggesting you use this strategy. It certainly has risks, and it certainly has not worked out for me from time to time. Ultimately, you're probably best served just investing for the long term and not really looking at day-to-day movements. That being said, if you want to use a small amount of funds and kind of trade for fun with it, you might learn something as you do it. But again, this is definitely not advice or an endorsement of doing that. Circling back to the top mover section, just because you see something in the top mover section does not necessarily mean it's a good thing to invest in. In fact, it might be a pretty bad thing to invest in. It might be overhyped. It might be moving up in price because it's on this top mover section and not because it has a fundamental change to the business. It may be just subject to the whims of the market or the animal spirits, as John Maynard Keynes might say. So really the only type of investing that I really can endorse, though, is investing for a long term and investing in index funds, which, of course, this isn't investing advice, like I said before. All right. Well, thank you for listening to today's episode of the podcast. I hope you learned something from it. Have a great week. And as always, stay frugal.